morning, everyone. We will start the morning call. US markets were volatile, but both the Dow and Nasdaq ended flattish. Asian markets are broadly up by around 1% today morning. On the domestic front, CPI inflation data came yesterday. It came at 7.8% for the month of April, above the estimate of 7.4%. And compared to March, it was in the March month, it was 7%. So inflation is gradually increasing. Because of this, we expect RBI to hike rates by 75 basis points in the remaining part of the financial year. So we expect hikes to be front loaded and expect around a 25 basis point hike in June policy, August as well as October policy. Index of industrial production, that is IIP, also grew by just 1.9% in the month of March, which is in line with estimate. I will now hand over the call to the technical team.
Yes, thank you, Jihan. Good morning, all of you. Yesterday, we have seen that when the Nifty has broken 1600 psychological drop, we have seen the intensified selling pressures, which has dragged the Nifty towards 15,735 odd levels. But somehow Nifty manages to bounce back from that level up to 15,800 levels, which gives some sort of a relief sign. Today, looking towards the Asian markets, I believe we are likely to open with a gap up opening, which might take a Nifty towards 15,970, 16,000 odd levels on the high sides. Today, we need to keep an eye on whether the Nifty maintains a positive closing above 16,000 levels or not. If not, then again, we are going to witness some selling pressure on an intraday basis. But definitely, a pullback cannot be denied at the current levels, because we have witnessed a selling pressure since 18,000 levels up to 15,700. So pullback rally can be seen into the Nifty in the coming few trading sessions, which might take the Nifty towards 16,400 to 16,500 levels on the higher side. For today intraday purpose, 15,970, 16,000 is the first resistance. Any more above 16,000 levels will take a Nifty down towards 16,120 to 140 levels, whereas on a downside, 15,840 will be the first support level. Below that level, 15,770. Coming towards the Bank Nifty has an important resistance level at around 34,000 levels. If it surpasses that level, 34,380 levels can be seen. Whereas on downside, 33,200 and 32,940 are the important supports for the Bank Nifty. Coming towards the Nifty Finance, for today intraday purpose, 15,300 is the first resistance levels. Any more above that level, we expect a positive momentum into the Nifty Finance, which might take the indices towards 15,370 to 15,400 levels on the higher side. On the flip side, 15,150 and 15,080 are the two important support levels for today intraday purpose. The overall view will remain cautious on the Nifty, but yes, definitely pullback rally can be seen into the market in the coming few trading sessions. So you can participate in the pullback rally, but with the strict stop losses. I think that's it from my end. I request derivative guys to take a call forward.
Thank you, sorry. Good morning, everyone. So as for derivatives, the data front, as I mentioned in yesterday's trading session, that Nifty is likely the support for the next level for the Nifty would be 15,800 level, and we witnessed it that 15,800 got broken in yesterday's trading session, but the closing came above 15,800 level. So again, 15,800 will act as an important support level. Below that, directly the next support would be 15,600 to 15,500 level. As per the OI position, we are seeing that the Nifty is likely to take a range of 16,200 to 15,800 level in coming trading session. Because in the nearest strikes, we're witnessing that at 15,900 and 16,000 strike, call rider positions are getting continuously added up. So till that time 16,000 level is not broken, we might witness some sell-off again from the resistance levels, and again the buying to be witnessed from the buying scenarios. So currently the view as per the OI positions is like the market is likely to take the pullback from the supportive level, as I mentioned mentioned that PCROI is also trading around 0.63 and yesterday gave closing at 0.63. It is trading at the oversold zone, and after a long time we have seen that the PCROI came down so much low. So there are most probable chances that the PCROI whenever comes around 0.60 level, there is a chance of the high pullback level, and which might take Nifty almost around 200 to 300 points on the upper end. So currently we are witnessing that Nifty is likely to come around 16,000 level. So once if we today is a Friday closing, so weekly closing once it comes above 16,000 level, then we might expect more 100, 150, 200 points on the upper end. But once if Nifty manages to view closing above 16,200 level, then fresh long positions will be created, which will directly shift the range 500 points on the upper end. So hold your long position to the supportive level, as I mentioned in yesterday trading session also. The only cautious part currently in the market is India VIX. India VIX is currently trading around 24 level. So once if India VIX comes below 18 level, then at that point of time we might see some uh, supportive rally from the volatility front also. So currently hold your long position with the support of 15,800 level. As per stock specific, we expect some of the stock which have seen some short covering rally and which might see some short covering rally in next 1 to 2 trading session is Ambuja Cement, ACC, Gujarat Gas and Ashok Leyland. These four counters looks positive in coming trading session. Thank you.
On the results front, Larsen and Toubro result was marginally below expectation. The revenue excluding IT and financial services, which is the core business of this company, constituted around 78% of total revenues, and it grew by 8% year on year. EBITDA margins declined to 12.3% versus year on year it was 17%. So we have seen a big dip in margins, because of which the core business profits have declined by 13%. Order inflows, although they were strong in Q4 at 46% growth year on year, which was led by renewed traction in international markets. However, the weak inflows in the first 9 months led to total order book growing by just 9% year on year. So we can expect a similar kind of growth, going forward, as the order book has shown, and also the company has guided for order inflow of around 10 to 12% growth in FY23. So overall outlook remains neutral on L&T. Credit Access Grameen, the microfinance company, result was above expectation. Loan book grew by 20%. Gross NPAs declined to 3.6% compared to 6% in December quarter. So we have seen a significant improvement. Company also gave a guidance that loan book will grow by 25% in this year. Credit cost will decline to 2% from around 5% in last year. ROA will come at around 4% and ROE of 17%. We feel there is a good likelihood of the company delivering on this guidance, and we are positive. Also, stock has come off a bit in the current correction, and we think it offers a decent opportunity to play the bounce back in the MFI industry, which has been under pressure since last couple of years. But we are now seeing that across the board, all microfinance companies are showing good improvement. Another microfinance small finance bank in the business of MFI is Ujjivan SFB. So Ujjivan result was also above expectation. Asset quality performance improved. Credit cost came at less than 1% in current quarter against expectation of 3%. Gross NPA came down from 10% to 7.3%, and net NPA has now reduced to just 0.6%. Also, the overdue loans, which is 0 plus days past due loans, declined sharply from 15% last quarter to 10% in current quarter. So we feel that although on a quality parameter, credit access is much better, but still because of low valuation at around one-time book value, even Ujjivan SFB can perform well. Also, we have to keep in mind that instead of Ujjivan SFB, if someone wants to play this stock, then it is better to play it through Ujjivan Financial Services, which is the holding company. As over the next couple of years, we expect the reverse merger to happen between the two companies, and there is an arbitrage of around 30-35% left on the table for Ujjivan Financial Services, but one will have to hold it for a couple of years. ICRA Limited result has improved. So just like CRISIL, revenue growth was also good here. It grew by 14% year on year. And it was mainly driven by knowledge services, which is 1/3 of the revenue. So that component grew by 28%, while rating services grew by around 8%. EBITDA margin was also healthy, leading to profit growth of 50% year on year and 8% quarter on quarter. So we are positive on ICRA. So both CRISIL and ICRA should outperform. Poonawalla Fincorp, another NBFC where result has improved. The loan book accelerated to 17%, which is a multi-year high. Loan book was unable to grow because company was degrowing the defocused business, but now that is behind. Gross NPAs came down to 2.7% compared to 3.5%, and net NPA has also declined to just 1.1% compared to 1.8%. So within the auto NBFC space, we think Poonawalla Fincorp's performance is among the better ones, and even collection efficiency for March quarter stood at 108% compared to 99% in December. So we are positive on Poonawalla Fincorp. RBL Bank result was in line with expectation. Provisions and slippages remained elevated. Slippages came at 4.1% compared to 5.3%. So although a decline, but overall absolute basis, it still looks elevated. But on other hand, stock is also stock has declined in last 6 to 9 months by around 50% and currently trading at 0.5 times price to book multiple. So if the overall scenario, macro scenario, as well as the banking industry scenario improves, then this is one stock to keep in the radar. But for the time being, we are neutral. South Indian Bank result is above expectation. Credit cost came much lower than expectation. Slippages also are continuously declining. They came at 2.3% compared versus 2.7% in December quarter. Overall, bank's asset quality, if we look at last many years, then it has improved from position of very bad to now around average. And we want to see whether this March quarter performance is a one-off performance, or the bank can sustain this improved performance on credit cost and slippage going forward also. So for the time being, we hold our previous view of neutral on the stock, and if at all the performance continues to improve in coming quarters, then we will change our view. So that's it from my side. Thank you.
Good morning, everyone. Matrimony has posted its result. The company has posted okay set of numbers for the quarter, with revenue coming in at 110 crore and EBITDA came in at 18.6 crore versus QOQ of 19.8 crore. Stock is trading at 23.3 times FY23 EPS. TRAI has released March subscriber data, wherein Bharti Airtel has added maximum number of subscribers in March at 2.25 million. VLR subscriber percentage for this company stands at 98.7%. Reliance Jio added 1.26 million subscriber. VLR subscriber percentage stands at 93.8% from 86.7% in November 21, indicating loss in subscriber in last 3 months was likely due to removal of active subscribers. Vodafone Idea lost 2.8 million subscribers in March. Thank you.
Good morning. So Apollo Tyres announced its results. The results were marginally below expectation. Revenue came in at 5,578 crore versus an expectation of 5,510 crores, which declined 2.3% on a QOQ basis but grew by 11% on a YOY basis. EBITDA margin came in at 11.2% versus expectation of 11.5%, lower than 13% on a sequential basis and 16% on a year-on-year basis. The company indicated that the unprecedented rise in input costs in the year in FY22 has taken a toll on the company's margins despite internal cost control measures and multiple rounds of price corrections. The stock is trading at a PE of 12.1 times FY23 EPS. Lumax Auto Technologies announced its results. The results was ahead of expectation. Revenue came in at 417 crore versus an expectation of 400 crore, which grew by 2.5% on a sequential basis but grew by 7.5% on a YOY basis. EBITDA margin came in at 10.9% versus an expectation of 10% as against 10.5% on a QOQ basis and 11% on a YOY basis. The stock is trading at a PE of 10.2 times FY23 EPS. Tube Investments of India announced its results. The result was below expectation. Revenue came in at 1,734 crore versus an expectation of 1,811 crores, which was marginally flat at 2% over QOQ but grew by 17% on a YOY basis. EBITDA margin came in at 10.1% versus an expectation of 11.6% as against 11% on a QOQ basis and 12.7% on a YOY basis. The stock is trading at a PE of 36.1 times FY23 EPS. Siemens announced its results. The results is below expectation. Revenue came in at 5,578 crore versus an expectation of 5,510 crore, which grew by 2% on a QOQ basis but grew by 11% on a YOY basis. EBITDA margin came in at 11.2% versus an expectation of 11.5%, which grew by 13% on a QOQ basis and 16.2% on a YOY basis. The company booked strong growth order in the company witnessed strong growth in order income, reflecting a clear upswing in both public and private capex spending, with high value orders being booked in their mobility segment. The management indicated that revenues and profitability have been impacted as a result of global supply chain challenges, leading to delays in deliveries and increase in commodity and logistic costs. And the company also expects revenue growth to pick up in subsequent quarters. The stock is trading at a PE of 12.1 times FY23 EPS. Tata Motors announced its results. The results were in line with expectation. Volume came in at 3 lakh units versus QOQ of 2.94 lakh units and 3.26 lakh units on a YOY basis. The revenue on a consolidated basis came in at 78,439 crore versus an expectation of 80,900 crore, which grew by 8.6% on a QOQ basis but declined by 11.5% on a YOY basis. EBITDA margin came in at 11% versus an expectation of 10.6% as against QOQ of 9.4% and 14.4% on a YOY basis. The JLR revenue declined by 27% on a year-on-year basis due to lower volume. The company took an 8% price hike in FY22. The rest of the revenue growth was led by the better mix improvement. The company indicated that chip shortages are likely to continue in CY 2022, but there will be a gradual improvement. The management also indicated that CV demand is expected to grow due to improved freight availability, opening up of the economy, and improved finance availability. In PVs, the management expects sustained accelerated turnaround in profitability and market share gains led by new model launches, cost-cutting initiatives, and strong customer response. The company had market share gains of approximately 250 basis point in CV and PV. On the EV side, the company is growing with new model launches, network expansion, and investment in charging infra. The EV, which contributes approximately 7% to the product mix, is grew by 3.2 times in FY22. The stock is trading at PE of 14.9 times FY23 EPS. Thank you.
That's it from our side. Thank you for attending. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.